Hello and welcome to the ASB Investment Podcast, the show that keeps you up to date on the markets and helps you make smart choices with your investments. These are entirely our own views and that of our guests. It's not investment advice, but we know plenty of experts at ASB that will be happy to chat if you need. Well, hi, and welcome back to the ASB Investment Podcast. It's good to be back at the helm after being a little bit sick in the past week or so. We've been off air for a little bit longer than normal, and it feels like there's a bit of everything floating around that people are catching. I know the ASB office has got a few people under the weather with a variety of things, including the dreaded man flu, as we know, which is the worst of all ailments. Today we're unpacking two new ASB surveys that tell an interesting story about how New Zealanders are feeling about housing or investing. And joining me are ASB economists Chris Tennent-Brown and Kim Mundy. Great to have you both here. CTB, before we get to you, Kim, and a big welcome back. CTB, what have you been up to? What interesting, because I know hobbies and weekends and everything we talk about is the highlight of everyone's adventure on the ASB Investment Podcast. CTB, what have you been up to?
Well, I've had a pretty awesome time since our last podcast. I did deal with a little bit of man flu, but nothing major. But I don't know whether I mentioned this last time we chatted, but I went to the Rocky Horror Picture Show. Sinai, being from Japan, hadn't really heard of the Rocky Horror Picture Show. And this was actually the Rocky Horror Show. It was a stage show which essentially ran along the lines of the movie. So the highlights of my past week or so has definitely been teaching Sinai to do the time warp and then going and seeing some crazy people doing it. You know, sort of prancing around with a couple of thousand people, all dressed in various outfits, doing some sort of version of the time warp at the Civic in Auckland. It was neat.
Oh, how lovely. And were you involved at all in Warbirds over... was Warbirds been on yet?
So Warbirds over Wanaka is in a couple of weeks. I won't be there, but Kim's made me a bit jealous.
Be.
Yeah, she's going to be there. Yeah, but we had the Ardmore Air Show over the weekend and I was involved with that. It was good and tricky at times like this. I prefer to sort of think of it as a celebration of aviation and what you can do with it in terms of careers and that sort of stuff. But clearly with fuel prices high at the moment and global politics high, it's an interesting environment to be flying around in old aircraft, but we had north of 4,000 people out there wanting to see some old aeroplanes and learn a bit more about Ardmore's aviation history, which was fun.
Oh, and so Kim, it's great to have you back. Let us know how mat leave has been and how your bakery has. But before you get to that, are you an aviator as well?
I am. I mean, I prefer to watch them from the ground. I'm not a great flyer, so I've never taken CTB up on an offer. I prefer to be a spectator. No, I don't like flying.
Oh.
But I am happy to be on the ground watching planes fly. There's just some family ties. My uncles are quite heavily involved with Warbirds over Wanaka. My granddad flew Corsairs in World War II. So it's sort of a family tradition for us to go to Warbirds over Wanaka. We have for many, many years.
Oh, rad. Oh, I didn't know that. That's all. I mean, we've got two people of that persuasion on. And so how was your break? Well, sorry, how was your break from ASB work for mat leave? And obviously, how's the bakery going as well?
Mat leave was good. I have a happy, healthy 13-month-old now. You can't really ask for anything more than that.
Agreed.
She's fierce. She's going to test us in every way possible. She's your typical wild second child, from what I can tell. So we're very much being kept on our toes already. The loudest baby I have ever heard in my life. She screams and she screeches like nothing else, but I love her to death. And while we also, because we're mad, used all that spare time I have while I was on mat leave to open a second bakery / cafe. So we've now got that one going as well. So we've got plenty of balls up in the air.
Far out. Gosh, next thing you'll be, I'm going to overcome my fear of flying by becoming a pilot. I think I went out to check out the bakery. Is it the one behind the market at Hobsonville?
Yes, that's right.
Oh, yeah, it was awesome. Yeah, we got some stuff in there.
You.
I think I was looking for you, but then I was like, I'm not sure I should be here on the weekend. Why would you?
I am quite often, to be honest.
Oh, okay. Oh, we'll do another visit.
the new one in Mount Eden has been dragging me in quite a bit as well. So split between the two now.
Yeah, that's not around the corner, is it? That's actually
Quite
a
a
different
drive.
suburb. Oh, well, congratulations, It's great to have you back. And it sounds like you're roaring and ready to go. Let's get to sort of the first section, what's really going on and kind of this confidence rebound. Some of the reports have been saying. We've got two surveys. Both of your surveys show confidence lifting, but in slightly different ways. You know, whoever wants to go first, but how would you describe the overall mood amongst New Zealanders right now when it comes to housing, wealth and investing?
Well, maybe I'll just start with overall confidence, because it has lifted, but off the lows we saw nearly a year ago when we were dealing with Liberation Day and tariff announcements and all of that sort of stuff that really spooked markets around April. So we've recovered from those levels. But it's not staggering. It's lower than what we'd expect in a very confident environment as far as investors are concerned. And just a reminder, this isn't a particular type of investor. It's not an ASB, a customer investment sort of belief. It's around 700 people that we survey each quarter for how they feel about different things that they can generate returns from, all the way from term deposits through to housing, share market, KiwiSaver. So it's not at the sort of really, really confident levels we've seen outside of things like COVID or last year, but it has improved. What's really surprising within our overall investor confidence survey is that we are seeing investments like KiwiSaver and managed funds and the share market catching up, and in some cases overtaking housing as the place where people think they'll get their best investment returns. So that's the first time we've seen that switch over within this survey since I've been reporting on it. And it's really reflecting some interesting things. I'll let Kim talk about housing confidence, which is, we run it in parallel, but that's focusing specifically on how people feel about the housing market at the moment.
And I'd say there are some parallels there as well in terms of what we saw in the investor survey. But I mean, I think I would say that the housing confidence survey shows that respondents were sort of cautiously optimistic for the outlook, especially if we're talking about house price expectations. And I think that really just reflects the fact that we're in the middle of a sort of, well, we're starting to see a bit of a fledgling economic recovery come through. Interest rates have fallen from highs. The labour market appears to be stabilising. More recent data shows that there are signs that net migration is turning higher. So I think when you put all of those together, that is really sort of supporting New Zealanders' expectations that house prices can lift from here.
But I mean, I just... seat of my, well, I'm not sure what the analogy is. I'm just going to rapid fire question for either of you. Just which do you think is more important to the psyche of a New Zealander? Is it kind of like, you know, sort of the investor's confidence, or is it house prices? Whoever wants to step into that gap.
I'll start with a couple of comments in general. One is, within the investor confidence survey, we're asking people where they think they'll get their best returns. And so that's quite different from asking someone, is now a good time to buy a house or not.
Yeah, fair point.
A first-time buyer loves the sound of things like the housing market's going sideways. There's plenty of stock out there. Interest rates are very low. If you own a house or you own a rental property, or you're thinking about that, you're really concerned about how's this thing going to perform over the next 10 or whatever years. So now's just an entry point for an investment strategy. So the slightly different questions about, are you confident in buying in the housing market right now compared to where are you going to get your best returns, when a lot of people are thinking about over different sort of timeframe frameworks to buying a house. So that's important. But one of the things that both Kim and I have had to do during the course of being an economist in New Zealand is look at consumer confidence as well. And consumers and households in New Zealand feel better about spending if they own a house and it's going up in value. And that's what we call the wealth effect. Now, if we're in America, the share market's what they usually talk about when they think of the wealth effective investors. So,
Okay.
that's sort of three answers to your question. One is the two surveys are asking slightly different questions, and the second is prices are really important when we're thinking about consumer confidence, because I don't know, maybe people have some sort of invisible balance sheet in their head, but we certainly feel better about life as if we're a homeowner if it's going up in value. So I'll stop
Kim,
there and hand over to Kim.
with that rising housing confidence, is there anything specific you'd call out as driving that shift? Like, is it simply that things can't get any flatter than they were, so it's a natural kind of bounce, or is it actually, are there, like you mentioned migration? Is there anything that you'd put your finger on as one key thing, or is it more just a potpourri of different things?
I wouldn't say there's just one simple thing going on at the moment. There are, as I said, like a few different things that are all sort of moving in the same direction at the same time. And so that is supportive. I mean, there might also be an element of like prices just have to start going up at some stage. I mean, for a lot of people, that's what they expect from the housing market, is that house prices go up. And maybe what we've seen over the last 5 years is starting to challenge that view a little bit more. This is the first time in a long time that we've seen the supply and demand imbalance within the market to the extent that it is, where we do have quite an overhang of supply. There's plenty to
Right.
choose from, and that is having quite an impact on prices. But no, I don't think there's any one thing that's pushing this up. I think when you consider the fact that mortgage rates have come off their highs, so for a lot of people, that's freeing up some cash. They're feeling a little bit better about life. The labour market's improving, so we have seen an increase in employment growth, even though the focus in the recent data was on the unemployment rate going up. That was actually just because more people were coming into the labour market because they were feeling more positive that they were going to be able to get a job should they start looking.
That's good.
So that all sort of is just showing that people are more confident in the economy as a whole. And recent history suggests that when the economy is improving, that can be supportive for the housing market as well.
CTB, you mentioned you've been tracking the investor confidence survey since 1912 or whatever. I can't remember exactly the date you said. But you said it was one of the first times. I can't remember. It might have been 1912, might have been another date. I'm not sure. Just a subtle dig. Why has property fallen off, I guess, out of first place, always being the winner as such? Is it a structural shift, or is it simply that managed funds and investments have got their time in the sun and it's a temporary pause?
The answer's in both. For a lot of people that are in the housing markets and have been in for a long time. So, think of someone like me. I was going to say someone in the older age brackets, which is now me. Given that I was running the survey since 1912, I'm actually in the top decile. But no, in all seriousness, and someone in their 50s or 60s that is more likely than not to have purchased a house and owned it for a while will have experienced some strong capital growth. So when they look at their lot, that's going to be where they got their best investment returns, and they'll adapt that expectation to project it out into the future. Likewise, for people in that age bracket, now I've been invested in KiwiSaver since it started, but I had 20 years of working before it started. I started working. I left school as soon as I could, so started working and saving in the 80s. And so KiwiSaver's only been a part of the equation. If we look at someone at the other side of it, someone under 30 or even under 40, KiwiSaver will have been a part of their experience for their whole working life. And along the same time, it's got harder to get into the property market to buy a house from just a price perspective. And also the rules for investing in the property market as a first-time buyer or as an investor have got more complex. We've had changes in the taxes for property investment. For example, we've had changes in the lending restrictions that banks operate within from a housing perspective as well for a property investor or a first home buyer or any home buyer for that matter. So those all feed into the mix. But meanwhile, we've had more and more knowledge of KiwiSaver, more and more experience with it. And actually, despite all the global uncertainties, people are looking at some pretty decent returns over the long term, but also over the shorter term. The last 12 months have been pretty terrible on the news front, but pretty solid for investment returns when people are looking at their KiwiSaver balances, etc. So I think they all feed into the mix.
So, Kim, with what CTB's said kind of in mind, I guess as CTB's of one generation, you're of a different one. Is there anything like that's standing out with what he's saying there versus what's kind of influencing maybe you at what you're seeing in the data, or even at a personal level? I guess you've made the decision, you and your family, that there's business investment is actually another thing, alongside property, KiwiSaver, super, and all those things. Is there anything that you've noticed at this stage in your career and life that's kind of influencing you or people of other, I guess, similar life stage?
I agree with what CDB said. I mean, KiwiSaver has been around since I finished high school for me. So I have been in KiwiSaver basically my entire working life. I was able to use it to put towards a deposit on my first home when I bought. But it is becoming increasingly hard to save that deposit. And I know a lot of people that I talk to who are potentially a bit younger than me, for them, it just doesn't even feel like an option anymore to be able to save a deposit. Just isn't, without help, isn't a realistic goal. So I think we've seen that sort of shift. And with technology, it's actually become easier to invest as well.
Yeah.
There's a lot more talk about managed funds and sharesies and all the different ways that you can actually get into investing. Because I think maybe even up until the generation ahead of me, housing was the ticket to wealth. Housing was a ticket to wealth generation. And that's not necessarily what we've seen over the last 5, even 10 years. For some, yes. For others, no. It really has been a lot more hit or miss. And that's where it also comes down to where else do you want to invest? Some people will invest in their education. If you go to university, that's an investment.
Yeah, of course it is.
I think we're seeing people start to invest in themselves a little bit more. And so for us, that's the business side of things. It's another way to invest in yourself.
Yeah, and I guess it's another great example of diversification as well. And I think I always think it's rather than, if it still takes a hell of a lot of effort to get to that deposit, but maybe it's less about saving for a deposit now. It's as much as investing. So you need to take that as opposed to just putting aside some every week and letting it sit there. You got to invest your way. So that's maybe populating it. Do you, like CTB or Kim, whoever wants to go first? I guess with some of the things you've outlined, the environment's improving for property purchase. At the same time, people, are drifting away maybe, or the average person maybe at the margin is drifting away to investments rather than property as or managed funds and shares as their key investment rather than property. Is there now becoming more of a separation that housing is for the average person to live in versus housing as an investment? Whoever wants to take that question first.
I'll just start building a little bit on Kim's earlier point and your comment about saving versus investing. I think for someone that's under 40, they're not saving if their money's in a term deposit. If they've got a long time until they want to need it for retiring, they'd probably be strongly advised, not that we're giving advice on this podcast,
no, we're not.
But a financial advisor would probably strongly advise them to focus on that time frame and take a little bit more risk and try and generate a better return than what a term deposit can. Kim talked about just how hard it is to buy a house. And I think things like the sharesies and KiwiSaver and managed funds, those are investments for those goals that might take 10 years for someone to be able to achieve, to get that deposit together. And so if we look at people under 30 within our investor confidence survey, they're seeing shares as the thing that they think will generate the strongest return if we look at the proportion of people selecting that. And part of that micro investing is a big part of that, because you can invest for very small chunks of money. You can get investing in the share market. You can only invest in the housing market when you've got a lot of money for that deposit, however you manage to save it.
Yeah.
KiwiSaver's the same. And we see in the under 40 age brackets, that's where we've seen this big change in preference from housing towards KiwiSaver and managed funds and the share market for generating those stronger returns. So that's where people are choosing to invest their money in those younger age brackets. But turning to more of Kim's domain, the housing confidence thing, this is where a market like we're seeing now, where housing prices are flat, people aren't feeling too rushed, and interest rates are historically low. if we think about, well, my lifetime at least, are still very low. That's creating a expectation that maybe now is a better time to be buying a house, or at least looking as that as an option. So I don't think it's all over for housing for the under 40s, but it's certainly very challenging. But part of that confidence pickup is a bit of a reduction in the pressure that was making it so hard to get into. And that pressure was rising house prices, high inflation, high interest rates, etc., that we had a few years ago.
And don't forget also that the ASB Securities offers a share trading platform as well within our own stable there. So don't forget we also offer that. Kim, before we get into the wrap up section, I just wanted to, because I know a lot of listeners out there are not homeowners or are in the position to start giving up each weekend day looking at open homes with your other half, which we all know is a wonderful full-time job on top of your other full-time job. But so for renters, Kim, is there any standout things that you're seeing in the survey or in your day-to-day work that kind of says where the rental market is? And we'll just do that and then we'll get into the kind of wrap-up kind of questions at the end.
So the Housing Confidence Survey itself is mostly focused on home ownership. But I think from what you see in the responses, you can kind of make some educated guesses around what that might mean for the labor, for the rental market. But I think at the moment, one of the key drivers of the rental market is what we're seeing in net migration.
Yeah, right.
So when you have high levels of new people coming into the country, they tend to need to rent first. They don't tend to go straight into buying a property. So we have seen sort of rent prices come off a little bit just off the back of the fact that net migration has dropped quite substantially. And at the same time, we've also seen a little bit more interest more recently in the market from investors. So potentially what that is again, buying conditions have improved given that we're in an easing cycle, mortgage interest rates have come back off. And we're also seeing those tax changes coming through as well from a deductibility point of view. Whether you get enough investor activity that it boosts supply of rentals substantially enough, we're starting to see a sign that net migration is starting to pick up. So, getting more people in, that'll be more demand. But I think ultimately people need a place to live, and some people are going to be renters and some people are therefore going to need a home to rent, where other people want to be able to purchase their own home for whatever reason that might be. But I just think kind of if you look at both surveys at the moment and sort of take it all together, I think just what we're seeing is people might now be looking to buy a house for reasons other than simply, wealth creation.
Yeah,
because
right. Yeah.
At least for the younger generation.
And just as sort of some rapid fire ones to wrap up, I guess, to both of you, CTB, maybe you want to go first. What's perhaps one assumption New Zealanders might be getting wrong now about housing or investing, do you think?
Well, I think there's been an assumption that's disproven by the data that housing just always doubles in value every X numbers of years. And that's feeding into the Housing Confidence Survey. We have now had several years where not only have house prices fallen, but they haven't even shown signs of recovering. So it's understandable that people are changing their thoughts on that. But even those sort of decade-long views that, your money's going to double over 10 years are being challenged. And that was certainly what I was brought up with from the experiences of the 70s and the 80s and 90s. So, I think that is something that people need to rethink about. But on a more positive note, I'm really stoked that within the Investor Confidence Survey, we seem to be seeing a separation of housing as an investment, and to Kim's point, people looking beyond that as more of a part of what they want to do as part of the security for them and their family, and then looking at things like KiwiSaver managed funds, or indeed if it's investing in a rental property or buying a business, that's what we consider investments for generating returns. And so I really like to see those assumptions getting challenged and a bit of a separation and thinking of housing as part of what you want to do for yourself, your security and your family, whatever that may look like, versus investing, which is what we're trying to tap into with the Investor Confidence Survey.
And Kim?
I think the only thing I would really add just quickly is that, and I think we're also actually seeing this kind of change over time, is that people are realizing that it's there is also costs to ownership.
Yes.
So when you look at some of the cost pressures, some of the cost of living pressures we're seeing at the moment, it's rates and it's insurance. And so these are all part of owning a property. And those prices have, those costs are just going up as well. So I think that's that could be playing into some of the things that we're seeing going on here as well.
And okay, it's fine. Final question before we get into recommendations. Kim, if you want to go first for this one, what's the smartest question, or a great question, listeners should be asking themselves before making a housing or investment decision before the end of 26?
I always like to, I think you should just couch it as, why am I actually doing this? Particularly when it comes to buying a house. Are you buying a house to live in for your family? Are you buying a house for security? Or are you buying an investment? So you need to sort of know, how long do you intend to own it for? You have to have some real conversations with yourself about why you're doing it and how long you're going to do it for, because that changes the kind of scenarios and the outlook quite dramatically. So I think it's really important to have that conversation with yourself.
Yeah. And CTB?
I agree. And I think for people looking at housing as a decision, one of the things that's exactly like investing, regardless of whether you're buying a house for yourself or for an investment, surround yourself with experts so that you've got as much information as possible. Things like some of the first home buyer seminars I've spoken at and listened to lawyers and mortgage brokers and real estate agents, I thought, I wish I'd done this when I was starting to look at stepping on the housing market ladder. So that's sort of my comment, is beyond thinking about what you're trying to do, is make sure you're surrounded by experts to challenge your thinking and help you.
My one, I just simply was going to add, and I know this is starting to sound like a YouTube coaching, the millions of YouTube coaching videos and, performance coaches out there. But my one was simply just, where do you want to be in 10 years and work backwards from there? And I think if you had sort of, how does this decision or thing I'm weighing up contribute to that? That can kind of get you out of the day-to-day. What am I actually doing it, per what sort of Kim was saying? What am I actually doing this for? Is it just to keep up with the Joneses next door, or is it something I've heard while scrolling up or down, or whatever way social media users do it, that I'm just trend following? Or is this something that actually in 10 years' time I'm going to look back and go, this helped me or us get to where we want to go? So I think that was always a good question to ask. CTB, you can kick us off with the final question. What's something you're reading, watching, or listening to, or doing that you want to share with our listeners this time? Because we know, again, everyone loves to hear about the hobbies.
That's right. Hey, well, I've got to confess, I get way too bogged down in reading news at times like stressful times like now. As an economist, I got really interested in military history because I wanted to learn about when the world was going completely wrong, what might happen to economies. And now it does feel like one of those times when I'm scrolling. So I've been reading way too much about the Middle East. I sometimes lose sleep all through the night because I'm so worried about global politics. Like most people, I just hope from a humanity perspective, we get to swift end to some of that sort of stuff. But I do have some circuit breakers, and I'll be pleased to tell you I've got a new Lego model to make.
Have you? What one?
I've just finished making a Land Rover, and I bought another Formula One car.
Oh, great. The Defender Land Rover, was it?
Yeah, that's right.
Yeah, I could see
now
you
I've got
that.
Yeah, that's right. I know. I sent a photo to one of my car dealer mates and said, I don't need a new car. I've just bought a Defender, and then sent him a picture of the Lego model I'd made.
Oh, well, it's to scale, just a fraction of to have the real thing. Kim, in true welcome back fashion, what's one thing you've got to offer us, to signify your welcome back?
So I am actually reading at the moment, which is did something because I don't have a lot of time to do much of anything. But I have been reading Lessons on Living by Nigel Grant. So it was the book that he wrote after he was diagnosed with cancer. So I would say it's so far equal parts heartbreaking and thought-provoking. And at this point, I would actually say it's probably a book that everybody should read.
Oh, fabulous.
So yeah, it's taken up a decent part of my evenings at the moment.
Yeah, and I know when you've got a young family, that reading time is few and far between. So I
mean, yeah, there's a lot of Nina and Friends that's also read, but
yeah, very unfortunate events with Mr. Latter. But I think that's if there's one thing that can come out with from that. It's books like that help you, sort of check what you're doing in your life and what really matters. My one, my one went in a totally different direction. And I guess it's living in the moment. But I went to Rainbow's End on the weekend. And hit all of the big...
Where the fun begins.
That's, and does not end either, Chris Tennent Brown as well. So log, flume, gold rush. My daughter went along, and she's a good risk manager like myself, so we were cautious on what we applied ourselves to. We did not... the risk-adjusted returns profile of the roller coaster and mayhem just didn't stack up from our point of view, so we avoided that. The portfolio was... just had enough risk exposure, so we did a lot of sort of lesser things. But it was a great day out, and I think don't knock it until you've been back. It's a wonderful little spot. So I don't know if either of you have been there, but hey.
Well, I grew up in Tautau, so yeah, of course I've been to Rainbow's End, and one of my naughty friends got into trouble for trying to hop out of the log flume and jump into the elf area.
Oh my gosh.
There's always one.
That's not an easy, having been there with less than 24 hours ago, that's not an easy feat.
No, that's the bad behaviour of people in the 80s, Nigel. I'm sure the youth of today don't do that sort of stuff.
That's right.
And it wasn't me, just to confirm.
Well, as the survey says, we're all investors now, so that's what, you can't sort of have that crazy risk exposure. Kim, CTB, thank you for joining us, and I hope you had a good time. And to you, Kim, as well, welcome back. It's good to have you back on board.
Thank you so much.
And see you again soon, CTB.
Yep. Thanks. And I've just got to confirm how cool it is having Kim back. We started out carpooling to work together when she first joined ASB a wee while ago. And a wee while ago.
Years.
Yep.
Oh yeah, and haven't done so ever since you tried to jump from the moving car, CTB, like your mates, I guess.
No, we were happy carpoolers together. I even picked up Kim a coffee, and so when I picked her up, she'd had a hot cup of coffee.
God, it was the good old days, and then I made the mistake of moving to Hobsonville.
Yeah, you should have stayed in South Auckland, Kim.
Well, we'll let you guys take that offline. You can just catch up on, how you can reorientate that. Thanks so much, obviously, for joining us again. And thanks to you for joining in, as always. We'll be back again soon to help you navigate everything going on, whether it's housing-related, investment-focused, or anything else that affects you and your precious savings. Until next time, stay safe out there, happy investing, and bye for now. Thanks for listening to the ASB Investment Podcast. If you have any thoughts on this episode, or if there's anything you'd like us to discuss on a future show, get in touch with us at podcasts@asb.co.nz.